Welcome to the FX Terminal Weekly Market Review. Here's what moved the markets last week and what's ahead. Last week's market action was shaped by U.S. inflation and consumption data, pointing to easing price pressures alongside resilient demand. U.S. core CPI came in softer at 0.2% month-on-month versus 0.3% expected, signaling moderating underlying inflation. Headline CPI met expectations, while producer prices reinforced the cooling trend, with core PPI flat at 0%. At the same time, the U.S. consumer remained active. Retail sales surprised to the upside, rising 0.6%, and the labor market stayed firm, with jobless claims falling to 198,000. In the UK, monthly GDP rebounded by 0.3%, offering short-term support to sterling. Metals were the standout performers. Gold gained around 4% last week and gapped higher to a new all-time high at the start of this week, driven by rising geopolitical tensions following U.S. tariff actions on Europe and the risk of retaliation. Silver surged a further 16%, significantly outperforming. Crypto markets were more volatile. After a strong week with Bitcoin and Ethereum up around 6%, both gave back those gains early Monday as risk appetite faded amid fears of escalation. Looking ahead, the coming week is packed with key events. Canada releases CPI data across all major measures. The UK faces a heavy calendar with inflation, labor data, retail sales, PMIs, and remarks from BoJ Governor Bailey. In the US, focus turns to core PC, final GDP, flash PMIs, and political headlines. In Asia-Pacific, markets will watch Australian employment, New Zealand CPI, and a full Bank of Japan policy decision. German and Eurozone flash PMIs will also provide an early read on European growth. As we move into the new week, geopolitical developments, particularly around Greenland, are expected to remain a central driver of risk sentiment and overall market direction. Stay tuned with the FX Terminal for live updates and concise market coverage. See you in next week's review.